Welcome to Her Money Revolution. I'm your host, Angela Brooks, your guide on this journey to becoming a wealthy woman. As a certified financial planner, owner, and advisor at Family Capital Management, I'm on a mission to simplify the conversation around investing and to help women generate more wealth by making their money work for them. Join me as we navigate powerful financial planning strategies to help you achieve your personal and professional goals. This podcast is your go-to destination for no fluff, easy to implement financial and investing advice. If you are ready to achieve audacious financial goals, dream beyond boundaries, and generate massive wealth for you and your family, this podcast is for you. Grab a notebook. Let's get started. Hello and welcome back to Her Money Revolution, the podcast where we empower women to grow their wealth by making their money work for them. I'm your host, Angela Brooks, and today we're breaking down something that's been making headlines. You might be able to guess, but what I have been hearing so much about is the One Big Beautiful Bill Act. It's a mouthful to say. I've been hearing it called OBBBA Act. So that's what I will try to say more, or the OBBBA. It was signed into law on July 4, 2025, and it impacts everything from your retirement accounts to your paycheck and even childcare benefits. Today, we're going to unpack exactly what changed, how it affects women, families, and businesses specifically, and what steps you can take right now to make sure that you're getting the most out of it. I'm still trying to get my head around a lot of it as when I'm recording this. It's right around July 4, so I'm sure still a lot of moving parts and some things that have not been settled on yet. But for today, grab a notebook. This is one of those episodes that you're going to want to take notes. I'll give you as many details as I can. I'm going to break it down into 4 different segments. The first, what is it? The second segment is going to be the 5 biggest changes that you should pay attention to. Number 3, why this matters for women specifically. And then 4, your action plan. If you know me, I don't like to just talk just to talk. I want to take action. So I want to give you a good action step. So segment number 1, what is the One Big Beautiful Bill Act? The OBBBA is a far-reaching new law that brings major updates to tax, retirement, and business policies. So it's designed to address 3 major issues. The first one being that the expiring tax cuts from 2017 Tax Cuts and Jobs Act, which was originally scheduled to sunset in 2026. So Congress needed to make some adjustments or changes to that. It's designed to address the gaps in retirement savings. And I would like to say, especially for women and small business owners or part-time workers. And then lastly, the rising costs of living, healthcare and childcare, and to address some of those concerns. So instead of extending everything from 2017 as is, the OBBBA restructures parts of the tax code and the retirement system with new priorities. So it's not just another government headline. It really is going to impact your day-to-day money decisions. So that's basically what it is. But segment number 2, what are the 5 biggest changes that you need to know about? I'm going to break it down clearly. Number 1, increased standard deduction for retirees on Social Security. If you're 67 or older and receiving Social Security benefits, the OBBBA adds a new enhanced standard deduction. So in 2025, it's $18,000 for single filers versus the $15,700 that it previously was. If you're married filing jointly, it's $27,000 versus the $25,000 that it was previously. So it lowers taxable income for seniors so they can keep more of their benefit. So again, if you're 67 or older and receiving Social Security benefits, you have an increased or an enhanced standard deduction. The second big change, there's no taxes on tips or overtime. So here's how this works. Employees who receive tips can deduct up to $25,000 in tip income from their federal taxable income. Employees who earn overtime pay can deduct up to $12,500 in overtime wages from their federal taxable income. It's important to note that this applies to federal income tax only. So tips and overtime will still be subject to Social Security and Medicare taxes, and most likely or potentially state and local income taxes. So again, it only applies to federal. And then also all existing tip reporting rules remain in place. So like employees should still report their full earnings to their employer. There's also an income limit. So these deductions phase out for individuals with adjusted gross income above $150,000. Okay, and the last thing that we would need to keep a note on is that while the overtime deduction applies broadly to all employees that have an adjusted gross income below $150,000, the tip income deduction is limited to certain occupations where tipping is customary. So they haven't issued an official list yet, but I've heard that that's supposed to be published. That official list of the qualifying jobs should be published by October 31st, 2025. So stay tuned for that, or keep an eye out for that if you think that your business is in tipping or customary for tipping. Number 3, simplified tax credit for small business retirement plans. So if your business has fewer than 10 employees and you start a new retirement plan, so like a 401k or a simple IRA, there's now a simplified tax credit of at least $2,500 per year for the first 3 years that you start that retirement plan. So this is going to cover things like that setup cost, administration fees, or payroll integrations. It's a big deal, especially for women business owners who felt priced out of offering retirement benefits before. And I actually have a couple clients that I'm going to be reaching out to because we haven't set up retirement plans specifically because of the cost. So this benefit is beneficial for you and can be helpful. Number 4, childcare expense deductions for employers. So this one is really interesting. Businesses can now deduct expenses for on-site childcare facilities that they operate, or they can deduct expenses for reimbursements or stipends given to employees to help pay for childcare. These deductions equal up to 25% of qualified childcare costs, and it's capped at $150,000 per year per business. Fifth one to pay attention to is the bonus depreciation and the QBI extended, but it's modified. So qualified business income. So the first one, the OBBBA rolls forward the bonus depreciation at 60% for business equipment through 2027. That's the bonus depreciation. The qualified business income deduction for pass-through entities stays, but now phases out for income over $500,000 if you're married and $250,000 if you're single. To break that part down a little bit more, this was a little bit confusing for me. So before the new OBBBA Act, qualified business income, or QBI, phase-outs were tied to a complicated ranges based on like wages and property or business type. There wasn't a clear absolute income cutoff where you fully lost this deduction. But now with the OBBBA, Congress set new top-end phase-out limits. So if your taxable income is over $500,000 as a married couple filing jointly, or over $250,000 as a single filer, you no longer qualify for QBI deduction at all, which is okay. Like the phase out limits before, or the complicated formula was a lower income limit than that, my experience at least. Why they did this was the idea, my understanding of it was that the idea was to preserve the QBI deduction for small and mid-sized business owners, not for very high earners, right? So intentionally narrowed the benefit, middle income pass-through business owners. So basically now there's 2 layers. It's the higher phase-in threshold. So now it's starting at $75,000 phase-in if you're single, or $150,000 phase-in threshold if you're married, where limits begin to apply, okay? And then the absolute cutoff, again, $250 if you're single and $500 if you're married, where that deduction is fully phased out. So it's a little bit more cut and dry, simplified. Those are the 5 key things that I think you should be paying attention to. There's a lot more. There's other changes that are in place, but those are the 5 ones that I think impact us mostly. And that leads me into the next segment 3, why this matters for women specifically. And I think about myself, and I think about as a mom and a wife and a business owner, and knowing that statistics shows that women are more likely to outlive men. And that means that those longer retirements are going to happen, and that enhanced deductions today are going to matter. We're also more likely to run those small businesses or the service-based businesses, maybe with fewer than 10 employees. This makes that retirement plan credit and the childcare deduction really relevant for us. And then also many of us wear all those hats, right? We're both the employee, we're the employer, we're moms, we're working full-time, we're running a business, we're managing our homes. These tax changes touch multiple layers of your financial lives, both personally and professionally. So it matters, and it matters for the women that are going to be paying attention to this. So please educate yourself. That's the next step. Segment 4 is your action plan. I don't want you to just listen and take notes. I want you to move. I want you to take action. So there's a lot to this One Big Beautiful Bill Act. So I would recommend that you ask your CPA today or your financial advisor today to review how these changes impact you specifically. Like the updated QBI threshold, do you still qualify? Or can you now qualify? Or the new deductions. You want to understand today how they apply to your specific situation. So your CPA and your financial advisor should be educating, most likely, I'm sure, are educating themselves on this new app. So make sure that you schedule some time to connect with them, and they can walk you through it specifically for your situation. Ladies, the One Big Beautiful Bill Act is a mouthful to say, and it may sound like another Washington headline, but the truth is it's about how you, your family, and your business navigate money right now. It makes an impact on things that you're doing today. And the women who win with wealth are the ones who are paying attention, the ones that are asking the questions, the ones that are taking small yet consistent action. Okay? So I hope this motivates you and encourages you to take some action. This episode was helpful. Please share it with a friend. If you haven't yet, make sure that you subscribe to Her Money Revolution so you will never miss an episode. Till next time, keep believing, keep building, and keep blessing others with your financial wisdom. Thank you for joining me today, and I hope you are feeling more empowered in your financial journey. Remember, follow and subscribe to Her Money Revolution on your favorite podcast platform, and share your feedback by leaving a review. I'd love to hear your biggest takeaway from today's episode. Until next time, stay inspired.